you actually have a window where you can actually then use the Slido app and use it to actually ask questions, because we're going to make this really interactive. And then for those of you here with us, you have barcodes, use your devices, and then you can actually send us questions, and we'll make this session very interactive. So let's get started. Dear friends, really welcome to this first session. The topic is navigating and winning the energy transition. My name is Daniel Pacto. I lead our McKinsey Sustainability globally. I'm joined here today by Cindy Levy, my colleague, who has led our effort in getting ready and working with COP28. We also have an unbelievable panel with us today. Let me start here with Anne Finucane, who's the chair of Rubicon Carbon, alongside other positions in private and non-for-profit boards, and also the former vice chair of Bank of America. Thank you, Anne, for being with us. Lord John Brown, who's the chairman of Beyond Net Zero, a climate growth equity venture established in partnership with General Atlantic, and has also served as the CEO of BP from 1995 to 2007. John, thank you for being with us. Former CEO of Cummins, and good afternoon, everyone. It is fantastic to be here in the green zone of COP28 in the McKinsey Sustainability Pavilion. And we're kicking off the activities of what I think will be a very busy 2 weeks. We are super excited to have an opportunity to engage with all of you virtually and also in person for the next 10 days. We have a very charged program all around how we are going to basically navigate and win this energy transition. A few technical things. So if you are online on the, joining us online, on the screen, you actually have a window where you can actually then use the Slido app and use it to actually ask questions, because we're going to make this really interactive. And then for those of you here with us, you have barcodes, use your devices, and then you can actually send us questions, and we'll make this session very interactive. So let's get started. Dear friends, really welcome to this first session. The topic is navigating and winning the energy transition. My name is Daniel Pacto. I lead our McKinsey Sustainability globally. I'm joined here today by Cindy Levy, my colleague, who has led our effort in getting ready and working with COP28. We also have an unbelievable panel with us today. Let me start here with Anne Finucane, who's the chair of Rubicon Carbon, alongside other positions in private and non-for-profit boards, and also the former vice chair of Bank of America. Thank you, Anne, for being with us. Lord John Brown, who's the chairman of Beyond Net Zero, a climate growth equity venture established in partnership with General Atlantic, and has also served as the CEO of BP from 1995 to 2007. John, thank you for being with us. On the other side, Tom Linebarger, former CEO of Cummins, and also a board member of Harley-Davidson Board of Directors, and most importantly, has also led the Hydrogen Council for several years. And then Sumant Sinha, who is an Indian entrepreneur, doesn't need a lot of introduction, has been really passionate about renewable, and is the CEO and chairman of Renew. So that's kind of the group we have today. And we figured to kick off, these 2 weeks or these 10 days, let's start really with the easy topic, which is, how do we navigate and how do we win the energy transition? And what we wanted to do is to frame the dialogue. Cindy and I will perhaps share a few remarks, and then I think we'll jump straight into questions, and then we'll also go to the audience for questions. The first, I think we all know this. This is the topic of our generation and the generations to come, which is to really tackle climate. And we talk in some reports we've done 2 years ago. This is the largest capital reallocation ever, $3 to $4 trillion, incremental for 30 years. This is the $120 trillion that needs to get deployed. And to some extent, we need this to transition not only energy, food, material, and frankly, the whole system. The second thing I would say as we get started is, we're here at COP28, and Paris was COP21, and there's been a ton of progress since Paris. And I think we have 8,000 companies who've committed to net zero targets. We have 90% of the world GDP that is covered through kind of net zero ambitions. I look at the progress we made in renewables. We'll talk about this later. The cost of some of these technologies, and even the new technologies in the last 2 years, especially around carbon removal. Tremendous progress. The third thing, which is, and I think we've seen this in the latest IEA numbers. We've seen this in the global stock data. So we're not even remotely close to where we want to be, right? We're closer to 2.5 degrees, even more than 1.5. And I would also say that, it's game time for climate. I think, if you just look around the world and you look at the climate crisis that are happening and the hazards, I mean, it's just, it's something that's pretty devastating, and I think it keeps increasing. The next thing we would say is we actually have just released, and we're releasing it in the next few hours, a new McKinsey Global Institute report on really navigating and managing the transition. And I think at the essence of the report is this notion of this quadrilemma, that this is not only about lower emissions. This is about lower emissions. This is about affordability. It's about security, and it's about competitiveness. And I think companies, nations have to actually manage all four at the same time. And so, if your solutions are not affordable, at some point in time, you're not going to be able to scale them. And I think we also saw the importance of the competitiveness factor, especially with the IRA in North America, which is, this is about how you're going to compete long-term in this world of the energy transition. The important thing there too is there's this notion that we need to rapidly accelerate the scale up of new green technologies and reduce the cost of these technologies. And there's a target that we'll talk about this week, which is a 3x. It's a lot more than 3x. And I think for renewables, that cost has to go down a lot faster. I think we need to unleash the power of innovation on some other new technology, next-gen materials, carbon capture and others, right? Some of these technologies are not stable yet, and I think it's really important that more innovation gets done. And then, we talk a lot about the grid. I think there's also this notion that if we don't fix the grid, we can do a lot of other things, but this is just not gonna work. And then I think the last thing, which I think is important, is Glasgow was really when the private sector showed up in force. And I think we have this also well represented on this panel, which is it's really game time for the private sector to help with private capital, but frankly also leveraging philanthropy, which is going to be very important. And we at the end of that report, we talk about what are the actions for CEOs, for leaders, and it's really CEOs should do really, and leaders of private sector company, public sector company should do 4 things. They should be obsessed with what's the full potential value creation strategy around net zero, which is, how do you actually reinvent what you do? How do you play offense? What new businesses do you create? It's not only cost, it's cost and carbon. The second thing is rapidly hyperscaling green businesses, and then also decarbonizing existing assets. And I think to some extent, we've seen a lot of progress. There's more technology being deployed, but frankly, we need to go a lot faster. The third, which is it's not only about carbon, it's also about net nature positive. We as a firm have actually put a lot of emphasis on net nature positive and on creating our views on nature and biodiversity and almost rethinking planetary boundaries and creating cost curves around that. We think this is really the time to really advance on that. And then the last is nobody can solve this in one silo. This is really an ecosystem play that's required, and I think you're exemplifying this. So, Cindy, perhaps over to you with a few more thoughts before we get started.
Daniel, thank you. And thank you, everybody, for being here. Just a few thoughts and questions that I have as we go into this COP, which we've been really privileged to support. Based on the GST, which, again, was eye-opening, as Daniel suggested, and also based on the stated objectives that this COP president has put out there, the questions that I would have is when we talk about really going after emissions, how far will we get in the next 2 weeks? What will the oil and gas industry step up to deliver, especially on methane, for example? What will we do about coal early retirement? What will the other high emission sectors really get done? And this renewables pledge we're hearing about, how bold, how far reaching will it be to really slash emissions? And the second big question is, of course, finance, which I'm sure we're going to talk about a lot in the panel. But will the nations really get to that 100 billion? Will the development banks completely change their game because we now know they're not crowding in any private capital on climate? And I really look forward to seeing what new vehicles might be structured, how we innovate blended finance. And then finally, adaptation and inclusion. Will adaptation really stick on this COP? So this is the first COP with a health day. Will it really stick? Will it be funded? And on inclusion, what I'm looking forward to is, can we move beyond this broad phrase of just transition into something really quantified that we can actually stare into and say, okay, nations have different benefits and burdens. Let's actually put that on the table. So those are just a few questions I have as we get going. I just want to tell everybody that we are here for 2 weeks, every day, except for the day of rest. Please join us in person and online. And we're also going to be doing daily briefings of COP, of what's announced, what we think it means for leaders. So please, if you'd like to get that, just let us know. But to kick off our panel, I'm going to actually start with you, Anne. Please share where the positive surprises could be. What excites you about this COP and what might be achieved?
Well, thanks, Cindy and Danielle, for having us. Well, the first thing is the announcement a few weeks ago of China and America and their commitment to accelerate the reduction of greenhouse gas emissions. I mean, that's huge. They've both made them separately, but to do them together is impressive. As we all know, China is on the forefront of renewables, but they're also continuing on coal. So where are they going to go next? Really interesting. Capital markets. I think about, Daniel was mentioning COP21 and Paris, and I think about the concept of how corporations and capital markets would participate was vague at best.
Yeah.
And today we are really thinking about how to create market structures so that we can crowd in real money. I mean, there's real money happening. The infrastructure, the Inflation Reduction Act out of the US and the Infrastructure Act out of the US, the EU kinds of regulations, China's commitment. We're seeing just in 2022, 500 billion from China, 140 from the US, 180 from the EU. These are real numbers. Now, we know they're not enough. We know we need $4 trillion a year. I think you can figure your way to 2 trillion of those just market-based, just based on sort of a 20 equity percent and 80% finance. Just looking at what the banks and the private equity and asset managers are doing, you can get there. The question is what to do about the other 2 trillion, and that is where we need to have a lot of discussion. MDB reform is important, but Ajay Banga has already begun to make inroads on that and changing in just a few months, so I'm very encouraged by that. And the final thing I would say is I think this is a call for voluntary carbon markets, how to structure them in a way that they're transparent, that people feel good about them, they can be measured, and they can be part of the solution.
Fantastic, Anne. I'm sure we're going to go deeper on a few of these items over the course of the hour. Tom, I'm going to turn to you. What excites you about this COP? And also give us a little bit what your report card would be on climate action to date.
Well, I'm going to try to be positive, so let me start with what I'm excited about first. Yeah. Let me just say that I guess my basic view about problems of size is that unless you're aligned on what problem you're trying to solve, and with what urgency, you're not going to get to the solution. And I think those that are kind of aligned on this problem have come up with different constructs of how we could actually address climate change. That's where the $4 billion a year comes from and these kind of things. So I guess I'm a believer that we can solve it. I just think as nation states and as a globe, we haven't agreed that what problem we're trying to solve and the urgency we want to solve it with. And so what I'm excited about is that alignment is growing in part because of talks about adaptation. So as soon as you start to get real about what's going to happen when it doesn't get solved and what it's going to cost every nation and every city and every place, and it gets real, it gets easier to get aligned on why we might want to spend money today to avoid that problem in the future. And I spent a lot of time in California in the last couple of years, and I would just say there's nothing like not being able to breathe because the fires are burning and the smoke is in your face and you really can't go outside, to make you pretty aligned on the need to solve the problem. But too much of our world and our governments and our places are not yet aligned on that point on what the cost really is. So my excitement about this COP and my challenge to this COP is we need to start asking ourselves what the cost of not doing things is, because too many people are not doing things. And I guess that's where I'd say the challenge lies too, is that there's too many people on the sideline. I count big corporations like the one I used to run, so many investment companies and companies are basically saying, yeah, we look for good investments, just show us a good one, we'll do it. I'm like, yeah, but how courageous is that? I mean, of course, we'll all be glad to bank a business that makes us a lot of money. The question is, where are we willing to lean in? And why aren't nations like the US have a carbon tax? Why wouldn't we make it easier for investment companies? So there's just so many of these things that we already know what we need to do, but we're not doing it because we lack the alignment and we lack the courage to act. So that's kind of the challenge that I see in front of us. And I think that's why I join panels like this, to try to increase both.
Excellent. Lord Brown, Daniel spoke about the challenge of stepping up the way we tackle emissions, but at the same time, energy security, energy affordability, competitiveness. How do companies embrace that challenge? How should leaders embrace that challenge?
Well, I think first, it's very good to be here. I think the first important thing is to remind themselves that, of course, all these investments that you can make in climate are both long-term and to do with growth. I think it's very important to remember that. They're not just a cost. I think that is essential. Secondly, to remind themselves that institutions don't get things right in the first instance. So taxes, incentives go haywire, and you have to look through them to keep going. An example is offshore wind at the moment. It's got messed up because of the wrong pricing, the wrong supply chains, but that's not to say it's dead. It's not. It's going to fix itself. So people need to think that through and work with institutional owners, governments in particular, to change boundaries in order to get things done. Not everybody has it right in the first instance. We knew this in Climate 1.0 when there were so many big subsidies for things that people said, wait a minute now, they're too big, we need to change them. And everyone said unfair, but actually they were receiving windfalls that they shouldn't have had. So I think working with institutional structures are very important for leaders, working through changes because not everything is right. And finally, working with, I hope we come back to this, finance, which is both public and private together. Because I think that is the one thing which has been missing, I think, at scale. If we can find ways of doing that, and I'm hopeful that's what will happen at this COP, where public and private partnerships can come together and finance, this is a catalytic moment because it will push governments to do the right thing, and it will push financial organizations to come along with states to see how they can actually create real value.
Thank you, John.
Nicely.
Just linking the finance point, I want to go, Suman, to you and renewables. And I remember last year in India, we had this discussion about, we launched a report on decarbonizing India. And we talked about, 2/3 of the infrastructure still needs to be built. And I think it was super inspired about the ambition that you set and what you've done. We talk about, this COP is going to say 3x, right? 3x on renewables. We know it's not enough. It needs to be a lot faster. And we also need to take the cost down. So what's going to be required for us to achieve that? What are your views on this? Yeah.
Hi, thank you, Daniel. Look, I think first of all, it's terrific that the tripling of renewables targets by 2030 is actually out there.
Yeah.
Right. That's, I think, step one. Hopefully, at this COP, that gets concretized a lot more, and countries actually come together to figure out how that is going to happen. Who's going to triple? Who's going to quadruple? Who's going to double? I think we need that little bit of granularity behind this whole thing. There are many issues then that are involved in tripling. And keep in mind, that's a 2030 target, right? And if today we have about 3,500 gigawatts of installed renewable capacity, we have to get to 10,000 gigawatts plus at that time, which means an additional 7,000 gigawatts of new capacity, which is not a trivial task because it is almost equal to the entire installed power generating capacity globally right now. So that's how much we have to add just in renewables in the next 7 years, just to put it in perspective. So it's going to be a mammoth task. I think the issues there actually are going to be several. We all know financing, of course, is one of them that we talked about. Within that, how do we make sure that capital doesn't just go to the developed countries, it also goes to the developing countries, because we need there to be a layer of minimum amount of renewables in every single country in the world. And sometimes it's cheaper to add capacity in the developing world than it is in the developed countries. And so therefore your $1 goes a lot further in terms of carbon emissions reductions, right? So we need in some ways the development of a carbon market to go along with that so that we can have that trading happening, which then allows us to set up capacity in some of these other countries. I think there are a number of other limitations that unfortunately have to be debottlenecked. The grid, of course, is one of the most important ones. Right now, in places like the US, there is no extra grid capacity left. And so therefore, if you want to connect, let's say, a new green hydrogen plant with lots of renewables, in the Midwest, feeding power into a port in Corpus Christi, for example, you can't do that, right? So you have fundamental limitations in different parts of the world on the grid front. So the grid has to get debottlenecked and built out quite dramatically. And then there are significant issues around supply chain. Right now, 90% of the world's supply chain for solar sits in China, which is great because they're able to supply very cheap to everybody else in the world. But is that the kind of concentration that we require? And I think the answer to that we all now know, is no, we don't. We want to have a little bit more diversification. Now, how should that happen? Is I think one of the key issues that we'll also have to think through as we evolve. And the same applies to wind, it applies to batteries, it applies to the raw materials, refineries, etc., etc. So those issues will also have to be solved as we go forward. So when you look at it, there are quite a lot of issues, and then of course there is this whole construct of how you do all of this. I think the offshore wind industry got it a little bit wrong. In the era of declining interest rates and declining commodity prices, it was fine to take long-term 5-year construction bets and with fixed tariffs at the end of it. And now we know that that is not a sensible construct, right? And we are seeing the consequences of that. But if there's one thing I have to point to, which is the single biggest and most important problem for the renewables industry right now, then that is high interest rates. As long as high interest rates persist, you'll always have problems of adding new capacity. And that is something that is underappreciated and under-recognized. But we do need interest rates to come down. Otherwise, a lot of this will not really take place because cost of capital just goes up too high.
I want to perhaps jump around a little bit. And Cindy mentioned, the inclusive transition or an orderly transition. And, I think we as a firm, we got very passionate about this notion of an inclusive transition and almost trying to create a little bit of a scorecard by country on what does actually take to make this transition work, make sure nobody's left behind. Lord Brown, you've been studying this very complicated system for a while. What are a bit your views on how do we tackle this? And one version of this is the quadrilemma, but the other version is also, the capital, the funding, and then also, making sure you don't leave people behind, this notion of inclusiveness. Yes.
So I think first, I really think the idea of orderly transition is a wrong-headed idea. I don't think it's going to happen in an orderly way. I think it's 1.5 steps, half a step back, and it's testing and trying. No one has the answer. So that's the first point. And you can see that with incentives, you can see it with financial structures, you can see it with, changes in the macro environment leading to changed need for different pricing for offshore wind, all sorts of things happening. And you can see it the way people have built supply chains, and they are wrong for the moment. So everything keeps needing to adjust. I think that's very important. Secondly, I think one of the things that does need to adjust the whole time is what governments do. Governments are not global, they're local, and everything you have to look at the locality of it. And remember that, again, it's all a systems issue. You can't simply substitute and send people off with nothing to do, no jobs. You can't go and build wind farms or solar farms where people want to use the land for agriculture, or they just don't like you, and they'll sue you. I've been in all these situations myself, and so you have to listen very hard. It's not as if what happens with resource development, whether that's mining and oil and gas, is actually any different from energy development or electricity generation. It's all the same. It's about listening to the locality and deciding how you can get the best answer for the locality you're working in. And I think that's the rule always with these slightly very disruptive activities that are involved in transitioning energy or transitioning demand for energy.
Yeah. Tom, you talked a bit also about your background at Cummins, but also thinking a bit about this kind of brown to green transition, and I think we've talked a lot about the fact that we're moving from a asset light to a capex heavy world in terms of where capital has to be deployed. Any reflections on that, and also from your experiences?
Well, first, I wanted to just add on to something Lord Brown said, which is I really agree that the orderly transition thing is a false idea, and it causes people to wait for the perfect solution, for some technologist to deliver something that's going to be free for everybody and really perfect. And I think we're going to be disappointed by the side effects of everything from batteries to hydrogen manufacturing. There's going to be things that we didn't predict. There's going to be things that don't work the way we want. And if we don't get started, we don't solve those problems. So I think my takeaway from all that is urgency. In an environment like the one I was in with engines and mobility generally, it's a very tight ecosystem. Nobody will pay more for their Tesla car equivalent in the truck industry. When you're trucking around, basically people compete for pennies. Each shipment is pennies per pound. And I think it's true for most of the industrial sector, cement, steel, it's all based on commodity prices, and no one pays 1 cent more unless there's a carbon tax or something. So the question is, how do you move when you know you're going to make mistakes? How do you get going? How do you take a step forward? And I think that's really the challenge in front of corporations, in front of investment people that are trying to advance this cause, is where can I get in, take some risk, learn, get ahead with this idea that over time I win. Over time I create the value because I have a sustainable future. I've moved from a place where, in 20 years I'm no longer needed to a place where I have a sustainable future. And I've done it in a way that's increased value for the firm, as you said, made me more competitive. But I'm going to take a bunch of risky steps on the way because not everyone's going to be economically excellent on the first day I do it. And that was really the whole idea of a brown to green transition. If I don't move fast, though, I lose. There's no, I guess maybe the one other takeaway besides not orderly is that there is no stable position. Sitting where you are is not a reasonable answer.
May I add? I think one of the things which, since everything is still remains very uncertain and very immature in these areas, in spite of the fact that we should have been at this for the last quarter century, we haven't been. So when you make a move, make an investment, I think it's really important here to think about what optionality, what are you building for the future when things change? We can see it today. Wind farms get repowered. That's very important because things change. We will see this with solar farms. Solar has not reached its maximum level of efficiency. It will change dramatically. I know that we've just awarded a huge global prize to the inventors of the latest version of solar panels, and we know that they'll get at least double or 50% more efficient. So lots of optionality here, and I think that means you can move quickly, you can start, but you have to remember that you're going to redo things as you go forward. And that's where you're probably going to make most amount of value, actually.
I want to go back to a few of the capital points, and then Sumant, I want to come back to you also about renewables. But Anne, as we talk about the need to be bold and invest, what can we learn from what private capital has done and is planning to do? And then could you also come back to the voluntary carbon markets that we've also been studying and watching and supporting? And it has had its ups and downs, and there's still integrity concerns. Some people are taking a position that we need to go more really into the compliance markets, and the VCMs won't have the legitimacy we thought. But what gives you hope that we're going to really crack these markets and they'll move the world forward? So if you could touch on those.
Great, thank you. Well, I mean, going back to a point Tom made about a carbon tax, that would be great. I just don't think it will happen in the U.S. So I'm dealing with what we've really got in front of us. I mean, the first thing I would say is I'm perhaps a bit more optimistic, because when you talk about solar or wind or lithium batteries or even EV cars, in 5 or 6 years ago, they were out of range in terms of cost. Those costs have come down so significantly that the real issues are about permitting or local government. which is what Lord Brown just raised, it actually isn't about cost. And had you not had private equity and asset management in early, putting in venture capital or at least risk capital, then sort of more traditional finance coming in back of that, you wouldn't have a lower solar price. We don't have a lower solar price because we wished it away. It's because over time, each iteration, we learn how to do it more broadly and cheaper. So the issue really now becomes local governments permitting. In the United States, we do have this Infrastructure Act, so we will have the ability to link grids in a way we haven't before. But that's all on the come. But it's happening. So I think the difference is it's not just an idea that we can't figure our way around. These things are happening, and they always sort of happen the same way. Slow at first, fast in the end. And slow at first with solar and wind, not the issues with wind are different. But just using solar, EV, cars, lithium batteries, these things have all become de rigueur, they're cheaper, and they're going to be more available. In terms of financing, I think what we're seeing is, again, the usual, in that the private equity or the asset managers, the venture capitalists come in early. They expect market returns. The more traditional banks and financial institutions come in back of them. But what's different is that we're looking at new blended finance opportunities, which we weren't really looking at before. We've tried them, but they were one at a time. They were onerous. You couldn't reproduce them. So they would take so long to do, and you'd have so many tranches of financing in, that the idea that you're going to be able to then repeat that quickly and broadly wasn't happening. What I do think, with the incentives that we're seeing out of countries or out of regions, so the EU, the US, and China, what we're seeing is incentives to do more and more quickly. I do think voluntary carbon markets are going to play a big part in this, and I'll explain why. I don't think there's going to be a carbon tax. I don't think there's going to be US regulation that is writ large. There's a lot of compliance issues in the United States, but they're by state or by region. So the voluntary carbon markets are going to essentially take the place of a compliance market. They will behave on a voluntary basis as if they're a compliance market. Why would companies do this? Because they have made commitments to become net zero. They can't possibly get there on their own for very legitimate reasons. The infrastructure is not in place. The technology is not there yet. So if they show their work, and those companies that are showing their work in voluntary carbon markets are also the same companies that have committed to net zero. They do an audit, they show their progress, they report out, they do it with transparency. My own feeling is we need standards that we all report in the same way, so you can really look at each of us and see how well we're doing. The second thing I'd say around that is that although there's been resistance for many NGOs about the voluntary carbon markets, just recently, VCMI, ICVCM, all of these initials, Voluntary Carbon Market Integrity Initiative, which had formerly said no carbon credits, has now opened up the door and will allow for them. Now, we'll have to work all that through, but I think what you're seeing is the multilateral development banks, the NGOs, recognizing they need money for the global south, and it's not going to happen another way. This is how it's going to happen. By companies putting money in for voluntary carbon credits, you will have to track their behavior. You will have to make sure you think that they are legitimate credits. But these are essentially going to become the concessionary capital and the first loss money for the global south.
Excellent. That is a vision that is very exciting. Let's, absolutely hope that we make progress this week. Coming back to the global south, this COP president and this UAE government has also announced direct investments into African renewables. What is the potential there? How fast can renewables scale in Africa?
That's an interesting question, and I'm not sure that I'm the best person to answer that. But to take a stab, the issue with Africa is that, in terms of size of population, it's similar to India. It's about 1.4, 1.5 billion. But I don't know how many countries, but there are many countries. And each of those countries has their own political jurisdiction, their own laws, and the whole continent is not connected by a single grid. And that's a pretty fundamental issue. Um, and the credit quality of the off-takers is also not very good. So I think it's going to require a lot of effort. I think on the parts of various financing institutions to be able to uh, uh, sort of protect some of the risks and then be able to get the financing to come in. But I think in addition to that, because each of those countries has a small market, even a small amount of renewables can actually upset the grid. So grid management is going to have to be very carefully done, and that's where the lack of interconnectedness and the lack of having a single grid manager becomes an issue. So you will be able to have some degree, obviously, of both wind and solar getting installed, but at some point it will hit a cap, and that cap will be pretty low. But it's great that countries like the UAE are thinking about investing large amounts of capital because I think those countries don't have a lot of their own capital. So if anybody externally is willing to do that, then that's terrific. Of course, there's no question about it. So that's really it.
Cindy, can I just add one thing on that? One thing I was just going to say is that I think back to this alignment, getting us all aligned around the problem and its urgency, the more people can get in the game in every place, the more likely we are to see alignment. So despite the fact that it might be more difficult economically to do the renewables in Africa, I still think if we don't touch everybody with some of these solutions and some of these things that are happening, then they don't get a chance to play with solar farms. Then they're not part of the solution, and they're not going to help us get there. So I think everybody needs hands-on in some way in order to be part of the overall problem. So again, as a capitalist and economist for a long time, it's hard to kind of get my mind around that, but I've now decided that if you need everybody in order to build alignment to solve the problem.
If I may just step in there are also basic, I think, understanding issues. When I was at Sharm el Sheikh last year, then I was at a discussion with some folks from Africa, and their contention was, look, we didn't cause the climate change. I mean, the usual developing country issue, which is that, look, we didn't cause the problem. Now you want us to move towards renewables. Renewables is more expensive. It's more capital intensive. Why are you penalizing us? Somebody else should fund this, right? And of course, that there is, of course, some element of truth in that. But I think what it did not recognize is the fact that renewables today have become so much cheaper. That's right. And for any developing country to go forward, renewables actually is the right way to go, right? And if you can right from the get-go manage your grid in a way that is designed for having more renewables penetration, you can have solar rooftop solutions, for example. You can get aid from multilateral institutions. You can do a lot of things. You can get a lot of experts to come in and help you do all of this. I think there needs to be a little bit of internal effort as well. And every country needs to do that. People can't just play the victim card beyond the point. I think they have to also start doing things for themselves. And I think part of it is lack of information. And therefore, I think events like this or gatherings like this hopefully get the news out there that in fact renewables is the smarter thing to do now. It's not something that is being imposed on anybody any longer.
And we've actually seen in a lot of our work, Daniel and I both mentioned about trying to really quantify the burdens and benefits for all nations. And there is this dynamic where the journey is quite costly, for some of these countries, some of the Asian countries and African countries, 15 to 25% of GDP required to invest per year to get that. But the end game is actually quite good once you get there. If you then look at the economic impacts, the burdens in Europe are only about 3 to 5% of GDP to invest. So they are uneven, but how do we get to the end of the road? And the more that we can actually start to put numbers and use mechanisms like voluntary carbon markets.
I must say, I think a way of starting this, of course, is distributed generation. And that doesn't rely on grids. And there's still a long way to go in that. In our direct experience, at Beyond Net Zero, we've invested heavily in this area, and it's growing enormously. You know, we have 20 odd million customers, and it's growing at 2 million customers at least a year. So plenty of space, and it's in the theme of let's get started and do something, and then the more complex problems of discussing with a government about how to change their policy on electric generation and the grid and the standby and what sort of exactly what sort of regulations they need, that can follow. But right now, it means that people, regular people, get clean energy, and they get to pay as they go. And that's quite important. So I think as a practical matter, there are lots of things you can do around the big issue. I think the bigger issue, I'm with Anne completely. I mean, I think if there were two things I'd hope that this COP will do, one is really push this question of public-private or blended finance. It's really important because when it gets started, it's catalytic. You know, when one person sees it's happening, more come in, and there's no doubt that there are plenty of places where you can make positive returns around the world if you have blended finance, no doubt about it, with the security that gives you. I think that's really important. And secondly, there is no doubt in my mind that if we could fix the voluntary carbon market with standards, someone has to be accountable for standards, then it opens up finance for the global south, for emerging, developing economies, the likes of which we haven't yet even got our heads around. A lot of it can happen. So if there were two things I would put up there, it's those two.
You know, can I come back to one point I think each of you mentioned, technology and innovation. And, you know, Cindy and I were comparing notes. I think we're perhaps technologists and kind of optimists at heart. You know, 2.5 years ago, we launched the McKinsey platform for climate technology. And then we had 12 technologies that we thought would change the world. You know, batteries, long duration storage, hydrogen. You know, last year we relaunched our nuclear practice. We haven't talked about nuclear, by the way, which we think is going to be critical to close this net zero equation. As you look at in the future, a question for each of you, which is what excites you? What are the areas where you would like to see more innovation as we progress?
Well, if I may,
please.
First of all, as an engineer, I look at technologies and say there is never a limit to any of them. And the only question is the rate of change. And the rate of change is partly about brains, a lot about brains all over the world, but it's also about use and ideas. The use tends to generate better technologies. So I look at things like solar, for example, and I think our idea that we really have a way of doing it is wrong. We're going to find different ways of doing that. We're going to get from over 20% to 35% efficiency of changing photons into electrons. That's going to happen. We're going to find ways, actually, I think, to take at the other end, of getting to fusion faster, not because we are smarter, but because we actually have got machines, computers, to simulate in a twin what experiments you would have to make in order to get fusion to really work. So rather than moving big magnets and big sets of kit around on the ground at $1 billion a go, you can do a lot of experiments numerically. And that will expand our choice significantly. Not tomorrow. We don't have to absorb a lot more. The ocean's a big sink. And if we find ways of doing that, it can be very benign and it can be quite dramatic in the way in which we adjust the carbon dioxide balance. So some very exciting things, I think, are on the horizon. Not ready for prime time now, but they'll be ready very soon. So don't rule them out.
And I would just add to that, if you're old enough and you look back a little bit, whether it's computers or technology in general, solar, cellular use, On the continent of Africa, with all their nations, the acceleration of of a cell phone and the ability to bank on a cell phone has grown exponentially. These things are always slow at first, and they are clunky in many cases. But most of us, over time, these things accelerate very quickly. We need the early investors that take the risk. We need the universities like MIT and others that are doing this work on fusion to consolidate the size of what it would take and the safety of what it would take. But they're happening in real time. So I would just say if we look back and what the cost of a computer was or data storage or a phone. I mean, the phones we had, remember they were huge and you would walk around with them. They were like satellites.
Yeah, exactly.
Satellite, yeah, right. These things are also different now, and it's really not so long ago. And the technology is better. We've got AI now. It's just the real test, I think, is can we apply it to the global south quickly enough that it will make a generational change that they don't need to go to coal because they can go straight to renewables, as an example.
Look, if I were to add to that all the things that have already been mentioned, and I'm going to be a little bit more prosaic about it and more here and now, I think that green hydrogen is, I think, underappreciated in terms of the ability to address a lot of industries, downstream industries, especially through things like green ammonia, methanol, and eventually also sustainable aviation fuel. I think all of those can actually then go straight into existing use cases. Carbon emissions. The other area where I think a lot more work needs to be done is in the area of energy efficiency. And I think that's an area where we can actually, there's not enough investment and not enough technology evolution that is happening. But I think eventually that is an area that will catch up as well. Buildings are getting much more efficient. And we know that buildings account for a large part of carbon emissions. And so I think basic things like that, I think will also be very helpful. And in fact, from a scale standpoint, may contribute a lot more to the energy transition and the carbon emission situation in the short run. So I would really focus on some of those here and now things as well.
I guess two things. One is the collaboration between industries and government and universities that's been driven because the problem's so big. I saw that a lot on the Hydrogen Council, drove a lot of really good solutions. There were a lot of things that people weren't getting to on their own that they started getting with together. And, these were lots of big companies around the world who didn't generally work together on very much. And we're all of a sudden working together on building the green hydrogen market or something like that. And so that level of collaboration is worth a lot. The second thing is it's a different idea, but I'm enthusiastic about how fed up young people are with us. And the reason is that I agree with all the inventions and how the sat phones changed and everything that Anne mentioned, but we don't have that long. We don't have as long as it's taken to get the cell phone to the size it is now to solve this problem. We burn up if we take that long. So our challenge, we have fires everywhere. We have really, really bad environmental situation if it takes us as long as it's taken us in the past. And I think when I talk to my daughters and their generation, they are really mad about it. And they are fed up and they want to move faster. And so my hope is we don't have to accept the point that Anne said that the US isn't going to have a carbon tax. I have the same realistic view that she has from going to Washington today, but I'm kind of hoping they're going to make it no longer okay. That they're just going to burn them up if they keep doing that, because I don't think it's okay. I don't think the status quo, that I think what we as a generation are leaving behind for young people is not okay. And I think it needs to move faster towards the solutions that they're looking for. And they seem to be kind of mad about it and moving and pushing us to go faster. And I hope that's true, because we need them. We need We need to go with more urgency. Period.
Right, and that's their job to be mad. In the same way, at another generation, people were mad at the Vietnam War, or they were mad at. I mean, that's how Earth Day began. A whole other generation. But we also need them to become the technologists of the future. That's what we really need them to be. And I would just say, I think there's a place for everyone to be mad, but for those of us that are in the do business, I would like there to be a carbon tax too. It's just I don't think there will be one. So because there isn't one, I think voluntary carbon markets can actually fill in the same way. We just need to do it that way. We need it to be transparent and be a standard so people are not guessing at this. I do think there are solutions. And I also think there are things that we've seen that are on a blended finance that could be reproduced much more broadly. You know, there was an effort the Nature Conservancy had of essentially taking the framework of green bonds and applying them to blue bonds and helping, I think it was Belize. And then they also had an insurance wrapper with a government, and then they had a bank come in back of it. The way a green bond works, it's boring, but it's very effective. And when it first came out, nobody wanted to use them. This is 2009. Why did they not want to use them? Bankers didn't want to use them because they had no margin to them. They were like a municipal bond. You buy the bond, it's very safe, but the return is very low. Until they realized, wait a minute, I'm doing a green bond for this big company and it's very low return, but it turns out this company has other business. And now suddenly I'm realizing I could help them with a lot of things. And so green bonds became a $2 trillion business from nothing. And all I'm saying is you use that, then you create a blue bond, then you come up with, you partner with governments for an insurance program. Maybe you add in voluntary carbon markets. This is not impossible stuff. This is kind of clunky, actually, but it works. We just have to make sure that it's transparent, it's standardized, people can see it, they can evaluate it, as opposed to it's too mysterious right now. It's too unclear.
Can I come back to this question of carbon tax? I mean, I completely agree that it's always dead on arrival when it goes to the Hill in Washington. America's very important, but it is not the whole world.
Right.
And the world...
But it's one of the bigger problems.
It's a big problem,
yeah,
but it's not 100% of the problem. And I think the world, the EU, for example, is moving towards pricing and carbon border adjustments. There are a variety of things happening which make the pricing of carbon and the taxing thereof more explicit. And I think they should be encouraged. It's, as I say, every tax is a local tax, and it has to fit with the values and the sentiment of the locality. And I think it's different in different parts of the world, and I would strongly encourage it. I do encourage it for other jurisdictions.
Well, I think that Fit for 55, where the cost of carbon ton is going to be 100 euros, that is going to set a new baseline.
Exactly.
That everyone may not follow that exactly, but it's going to be a bellwether for everybody.
And the CBA, the carbon border adjustment,
right,
will, I think, be a very important move here.
If I can just comment on the point Anne was making earlier on green bonds. We've done 9 international bond issuances, and by definition, all of our bonds are green bonds. I have not, frankly, been able to make out that we get even a few basis points lower cost of financing because our bonds are classified as green bonds. It's all based on ratings, it's all based on comps, and so on. And I think commercial markets like a bond to be a green bond because it makes them feel good, but they're not willing to give you anything in return for that. At least that's been my experience. So I don't know really how useful green bonds are, and maybe it expands the market and stuff like that, but I haven't seen any benefit. And as far as voluntary carbon markets are concerned, I totally agree with you that we need voluntary carbon markets to work. Unfortunately, today, the pricing in the voluntary carbon markets has sunk to $1 to $2 per carbon credit, whereas in the compliance markets, it's 70, 80, or even 100 euros.
Right, but the idea would be to sort of follow the compliance markets. And as Lord Brown is laying out, whether it's a carbon tax, essentially, because the cost of the carbon, or because of this border tax that will happen. If you overindulge, you're going to have to pay. These things are they've been passed, they're regulation, but they're only coming online now. And as they come online, for multinational companies, they're going to make a difference, I think. And that, it can't be a $1 or $2, price on carbon. It just can't be. But I don't think it will be.
True. I think just to give you a sense from a practical standpoint, we are looking at making investments in carbon credit generating projects. And today the pricing that exists is totally disincentivizing us from doing that, unfortunately.
Yeah.
And all of these projects have long lead times, So if you start something today, you do a pilot, maybe 4 or 5 years later is when you start generating those carbon credits. And if price signals continue to stay where they are, it's just going to delay the whole rollout. And that's why we just need an expansion of the 6.2 market, where we need compliance markets to actually expand, and eventually a fusing of both the markets. We can't have a separation of the two.
If we can do it right, it will become a commodity. There'll be arbitrage here. You'll actually be able to move more quickly. You'll have insurance policies on the carbon credit you're going to buy that's actually not going to come to fruition for 4 years. There'll be arbitrage on that. I mean, we need to get going here. Is what we really need.
And we will have to clean up the market to get there. We've got to clean it up and retire some of the stuff which is bad in the market at the moment.
Right. It's almost a start again.
Yeah,
I think so.
Yes.
That's right. So.
So, Cindy, your favorite topic, a lot of excitement on voluntary carbon markets.
Glad I asked.
Yeah, I was just tracking a little bit the questions. I think one we covered, but what are the investment themes to watch for as you think about the climate space?
Lord Brown is the investor here.
Well, I think the answer is there are a lot of them, and everyone needs to focus on some things. So we very much focus, for example, on efficiency and effectiveness, systems to make what we have today better without involving huge amounts of capex. Someone has to do that, and we like to think that we're doing that pretty well. And there's a lot more that can be done there. We're not going to replace every grid in the world. We're not going to replace every utilization of hydrocarbons. We've got to use less, get less CO2 out. We've got to get more efficient in a lot of things. So I think there's a tremendous amount of investment possibilities there. At the other end of the scale, there remain enormous investment opportunities in the continued electrification of the world. Whatever that is, whether that's grids, it's very difficult to get you can actually make transmission lines, private transmission lines in the United States even, and you can do it in a variety of jurisdictions as long as you can get your head around and get your conversations going with the regulators in the specific areas. Quite complicated, but you can do it. So I think there's a lot in electrification. And finally, I would add just one other, which I think is a very interesting area, which is how do you make agriculture much more efficient and much more climate resistant? So whether that's seeds, or whether it's bugs, or whether it's microbes, these things all matter.
Yeah.
And there's a lot more that can be done in that area, and that'll be important for the world. Some people think it's important for parts of the world at the moment, but since we see the world changing as a result of climate change, it's going to be important almost everywhere, even if you want to produce wine in France. That's going to have to change, as well as crops in Africa.
And Daniel, I would just add that I think just as Anne and Sumant were talking about how price signals have been kind of confused, regulatory structures, but they're starting to emerge. I think that gives industries a way to forecast how their price signals are going to change, which means now is the time that the companies that are essentially have to move from brown to green, they're fundamental industries, cement, steel, They can begin to come up with hypotheses for how they can get from here to there, which I think represents a significant investment opportunity for those people that are willing to kind of help live through that valley of death that a brown to green looks like, where you're investing in something where it doesn't pay today, but it's going to pay in the future, and it's going to put you in a different standing. I think that's a really big investment opportunity, and there's a lot of capital to deploy, but there's also a lot of technology companies out there that have good ideas for how to do some of these things. And so if you can kind of get your picture on how this is going to emerge, make some bets, I think that's a big investment opportunity.
If I can add to that, it seems to me that since we're sort of we're reinventing industries, and all industries need services. So therefore, you have to look at the services behind an industry to see if there's an investable opportunity there. And there is no doubt that's the case. Timing is, of course, everything. You know, you may get that wrong and you'll lose your shirt. But on the other hand, there are clearly going to be big changes in the services behind the industries that are changing from brown to green.
If I may add to that, I think, there is going to be two different kinds of opportunities. One is the industrial scale opportunity, which is where trillions of dollars of capital is required. You'll have your pension funds, you'll have your insurance companies, sovereign wealth funds, and public markets going into those areas. Broadly around electrification, as Lord Brown was saying, right? And there's a whole slew of things that people can invest in, from manufacturing to grids to generation to software, those kinds of areas. And then you'll have the tech kind of investments, which are all the new technology areas where there are enough people that are making bets in newer areas. And you pick any area around the energy transition, and there's many people probably working on it. So I think, and those are going to be smaller venture type investments. And then you'll have, I think, consumer facing industries where electric vehicles and the whole associated ecosystem around that, and other ways of reducing carbon footprints at the individual level. And the last is the corporate decarbonization area, which is also going to be a massive opportunity. And again, that's going to be a mix of both technology as well as large scale investment opportunities. So I would sort of categorize it in some of those buckets.
Summary.
I finance things. I mean, I'm very interested in both the technology and the infrastructure, but I think about other things. I think about how we can do one thing and repeat it to get to scale, because that's what is going to be what makes the difference. And I look at Africa, and it's approximately 50 countries in Africa. It's just not going to be smooth. It simply isn't. But I think the world should be incented to do as much as we can, because climate and conflict are on the rise, meaning that those that don't have enough food security, water, the ability to live at any level. Poverty is on the rise in Africa when great strides had been made for many generations or many years, many years. These are reversing themselves because of the climate issue. The climate issue is going to beget conflict. And then the idea of refugees and movement and conflict is going to be enormous. So I think as a very practical issue of defense, we all need to be thinking about this in the industrialized world. This is a real reality.
One bit technical question came in on hydrogen, and is hydrogen in the money, and have we reached the S curve already or not? And
did you say in the money?
In the money, yeah. And of course, what color, etc. But any reflections on where we are on this hydrogen journey?
Well, I can go first, and I'm sure
Yeah.
Tom will have given his role as hydrogen. Look, I think hydrogen right now holds a lot of promise, clearly. As I said, there are lots of use cases that you can build off of hydrogen. Obviously, I'm talking about green hydrogen here. Let me make that very clear. Today, green hydrogen, unfortunately, is more expensive than other forms of hydrogen, and by a reasonable amount. It's not like the distance is short. But I think that right now, a lot of countries are beginning to now think about moving some part of their hydrogen consumption to green. And I think you'll start seeing mandates coming in. We're already seeing that in the European Union. We're seeing that in places like India as well, the Far East. So I think that will kickstart the market. But I think it's going to take a little bit of time. Now, there are two fundamental parts to the market right now. One is replacing gray hydrogen with green hydrogen. That market is about 100 million tons of gray hydrogen equivalent of actually gray hydrogen. That has to be replaced as step one. And there are many industries where it goes in. And number two is a whole host of new applications have to develop that can use hydrogen, where there's a lot of work going on, which is blending green ammonia or methanol, those kinds of things. So methanol powered ships, for example, or green ammonia into thermal plants and so on. So there are lots of those kinds of applications that are developing that will really increase the size of the market tremendously. But I think because of the cost issue and a lot of the work that is going on, we're probably a few years away from actually seeing very large scale investments happening. But they will happen. Between today and 2030, you'll see many, many projects getting started and hopefully getting completed as well. So that's where we are.
Maybe just a few points to add. One is hydrogen's already a very large industry, as Sumant said. So it's definitely in the money. It's just made with hydrocarbons. So what we're really talking about is switching it to a renewable sourced green or a carbon capture. And they're replacing all those basic industries, cement and fertilizer and things like that. It's definitely not in the money. It's not close. Now, again, I say not close. I mean, it's closer than it was. And if you start with sort of 4 cents kilowatt renewable, you can get close enough that with a carbon tax or some kind of subsidy, you can sell fertilizer on the market at a competitive price. But you need both the carbon tax and a subsidy to get there, roughly speaking.
Yeah.
You can't quite get there even with just a carbon tax. Like if you use 100 euros, it's not quite enough. It's close, but not quite enough. So the point is, I guess I would say take that away and say not exactly in the money for that, and for transportation fuel, definitely not. It's not in the money, but it's a lot better, and we are going to need it. So even those that are big battery electric people, make no mistake, you have to have both. There is no future that I can see where electric solves all the transportation problems in the world. It's just not feasible. So thinking about a world where both exist, and the question about dimension, how much in which place, the locality question again, what's most easy for me to do. There needs to be molecules that you can move around, and there needs to be electric grid, both. And so, and the movement towards getting in the money is improving all the time, especially when we can use hydrogen for other things like medium term storage and things like that. So I think that there are some folks that kind of want to argue it's either this or that, and I think those people are just doing us a disservice. The answer is we need both and all, and how are we going to get there as quickly as we can. And last thing to say is I really agree with what Lord Brown said about carbon capture. I think it's a technology that we will have to use, and it's just not quite where everybody's hopes it would be right now. And there's still a lot of environmentalists that are deeply uncomfortable with putting it in a cavern. Maybe we'll make them comfortable as we get more comfortable, but they're deeply uncomfortable now. And so we just need to make sure we don't live in an echo chamber that say it's all fine, because they don't think it's fine. They may be wrong, but they don't think it's fine.
They don't know if it's fine. That's the problem.
Huh?
Yeah.
They don't know if it's fine.
Right. That's exactly. Well said.
I think there may be some interesting, but there are today, some interesting opportunities to generate hydrogen as a byproduct.
Yeah.
So think of a system where you get a credit for absorbing carbon dioxide into water, but actually as a byproduct, you create hydrogen. That could reduce the cost. I think the other thing which is interesting is I think there's quite a lot of misinformation about hydrogen, but a certain amount, probably less than 20%, can be blended into natural gas for normal use through normal reticulation, normal pipes. And it does depend. Certainly you can do that in homes. I'm old enough to remember when they used town gas in homes. Town gas was generated by steam reforming. Of course, it contained hydrogen. And so that was sent around houses, but a limited percentage. So I think that's very possible. And with the right combination of credits and imposts, it could be possible to be an interesting market for the future.
I just remind us all that most of these breakthroughs happen when universities, governments, and private financing come together. And there really are not exceptions to that. Maybe Apple is an exception to that, but for the most part, that's the combination. And these things percolate around for a while, and then they take off. So you need the private equity money or the venture capital in there, but you have to have the universities and the intellect, and you have to have an accommodating government. Yeah. And they are all local at the end of the day. So this is what we need to accelerate.
So, Cindy, I think we are nearing a bit the end of the session, and as we were preparing for our 10 days of program, one of the things we said is we want this COP to stand for the COP of rate of change, so that we spend a lot of time on the 2050 target, but how do we actually get progress? How do we put wins on the board? This month, in 1 year, in 2 years, in 3 years, and we have some of the best leaders that are going to come here for the next 10 days. What is your personal advice that you have for public sector, private sector leaders in terms of how do we really make this the COP of rate of change and results?
So I think
we'll go for each of you. Yeah.
I just observe there's obviously a head of steam behind this question of hydrocarbon, no hydrocarbon. I think if we'd started our journey in getting rid of CO2 25 years ago, started it then, we would be in a very different place, because CO2 is cumulative, it banks into the atmosphere. So the more we have, the faster we've got to get rid of what we're doing today. And we have to do that. We absolutely have to do that. But what we have to do is therefore expand very rapidly the non-hydrocarbon sources of energy. We really have to do that. And nothing must get in the way of that. No other debate is necessary. And I'd like to see that happen here. I think, so my 3 things are, let's get blended finance, get public-private partnerships working, and get that going. And I'm confident something's going to happen in that area at this COP. So private interests can execute, public-private partnerships produce the money, and the returns will be, I think, appropriate and occasionally have to be insured a bit. But surprising what can be done, because it's not just the public-private partnership, it's the partnership with the local government that matters. Secondly, I think I'm with Anne. We have to handle the VCM, the voluntary carbon market. We've got to get that sorted out, and we need standards. And thirdly, if there's one thing we could do, is methane. Methane is 30% of the CO2 equivalents of the energy business. And it's much easier to bottle up than, and trust me, I've done this, than carbon dioxide. There is no reason why we can't at least get an 80-20 solution here. Yeah. And we need to push that really hard. Of course, the energy business needs to reduce its CO2 emissions as well, and it needs to be pushed to do that on a timetable definitive. And all of these things, I think, here need to be accompanied by the right measurements and the transparent measurements and the annual transparent measurements of what's going on. Otherwise, we won't know what we're doing.
I agree with the measurement and the transparency and the continual disclosure. But I will tell you, I think companies are serious about that. They are, they are full of young people that care, and they would like to live to the next generation. So I think that's there. I'm encouraged by the commitments that China and the US have made, because they are the largest emitters. I also think we have to be practical, and I see a big difference in this COP from other ones. We're talking about climate finance, and we're getting into the details of it. What does it mean to have a voluntary carbon market? what do the multilateral development banks need to do to expand their lending? This was not there before.
Yeah.
We were not talking about that before. We were talking in conceptual form. So I think the more companies commit, but they know where they're going. Companies are very frustrated. I'm worried that companies will pull back, that they don't know how to make their commitments. They don't want to be accused of greenwashing. They don't want to greenwash. So if we can help them get to where they need to be by using voluntary carbon markets, by using blended finance, by having governments and universities and private equity do what they've always done, but at greater scale, I think that's a big difference. But I see that happening. I'm in these meetings with NGOs and governments, and a year ago, 6 months ago even, we were still pretty far apart. Suddenly, we're coming together because it's a necessity, and necessity does drive progress.
Great. I think we're three in a row on the internalize the cost of carbon, be it through carbon tax or voluntary carbon markets. But the government has to internalize the price of carbon, or else companies you don't put the economy to work. You got to do it somehow. Second thing I'd say is kind of what I started with, is governments need to align their constituents around how big a problem this is, how urgent it is, how much it costs to just keep going, so that when they have to pay more at the pump, or whatever bad thing they get why it's important, so they can breathe air and do all those good things they want to do. On the corporate side, again, you heard me say, I think courage is necessary here, because there's some pretty scary moments where the economy's not perfectly lined up the way you want. But again, I don't think anybody succeeded by just kind of grabbing ground and hoping it works out. So I think that, corporations are used to doing that when they kind of get their mind around it, and I think they can. So I would just encourage business leaders to come up with a brown to green strategy, whatever industry you're in, come up with one, push on it a little bit, get feedback from your investors, take some heed, do what you need to do, but get moving, because if you wait around, you're not going to finish first. I don't know where you're going to finish, but it isn't going to be first. And you're not going to be successful.
Yeah, look, very hard to add on to whatever has already been said. But if I was to think about what I might be looking at from this COP, in addition to all of these things, I'd say three things. One is this tripling of renewable energy target. How does it get manifest and concretized? I'd like to see what people have in their minds as to how that is going to be done. Right, so that's something that is going to be quite interesting to see, and also because obviously it has a straight business impact on people like us. The second thing is, this is in some ways the first COP that is being held not under the umbrella of, but certainly within the shadow of the oil and gas industry. How does that play out? I'm actually quite curious to find out. 7-8 days later or 10 days later, what kind of progress do we make by having the oil and gas industry potentially inside the tent, as opposed to outside the tent and being vilified, right? Does that change behavior? Does that lead to better outcomes? And that's something that is going to be interesting to find out. And the third thing, which I think started off at Glasgow, which was the involvement of the private sector, the corporate sector, which has now really taken off. It's really, I think we make a lot of progress on the margins now of COP. And that is almost going to become more important, because as we know, the corporate sector accounts for a large bulk of carbon emissions, right? So if the corporate sector can begin to do whatever needs to be done with its carbon pricing, transparency, and get more of that moving forward, then we can actually make a lot of progress on the margins of this whole thing, rather than in the main sessions or whatever happens.
The thing I wonder about is, if 80% of what we use now is still fossil fuels, but all the new energy, or 80% of the new energy, is renewables, how do we make that transformation? How do we accelerate that? I mean, what is the mechanism to accelerate that? I don't have an answer to it, but I mean, that is where we're going. We need to go. How do we accelerate it? And it does take industry and the business community to get behind that.
I agree.
And blended finance and VCF,
right?
And focus on the global south.
Well, listen, I think this panel was up for the task of this very difficult topic, which was how to navigate and win the energy transition. And so, Anne, Lord, amazing panel with us to get started. So perhaps at least here a round of applause for our panel.
Thank you.